Hello everyone and welcome to your bloody on-chain update for the 18th of August. We finally got some kind of maneuver and of course it was to the downside. So what we're going to do today is kind of explore some of these mechanics. We'll do a quick touch on the the options trade and see how that played out. But really what I want to do is kind of survey the damage, right? What's the driving factors here? How much of it is derivatives led? What are we seeing in the on-chain space? Now, naturally, when you have these big sell-off events, there's a bit of a dust clearing event, right? And something I'm certainly going to be looking to is obviously the investor response in the coming days and weeks. What I suspect we will see is that the buyers will actually start to come in. The mechanics of this thing selling off, right? The market just doesn't go to sleep. It has to move somewhere. What's going to be really interesting is, do we get any kind of sustained sell side, or are the kind of initial responses and reactions we see today what we see carry through? Obviously we're kind of assessing it as it happens, but particularly this is where our supply and loss and all that kind of damage, unrealized profit loss, these kind of things really come into the mix. So anyway, let's get stuck into it and start with the options trade. Now, this thing actually couldn't really have gone too much better. The only thing that really could have gone much better is if we actually rallied up and then had our event here, and you close out on both sides. So I did close my puts for I think it was about 2.5x, which again, it was only small money, but it was more so just kind of showing that the mechanics of this thing is it really didn't matter which direction it went. I've still got until the 25th of August, right? Well, I did have, because I closed all the positions today. But there was still a little bit of time. I was roughly down about 50% before it happened. So in the kind of halfway through, I had literally lost about 50%, maybe 55% of my option premium in time decay. And then by the time I got down to this level here, this is pretty much where I woke up this morning. It was essentially up 2.5x. Now that 2.5x offsets the calls. So these calls essentially expired. Well, they didn't expire, but they were worth very little at the time. They still picked up a little bit of that volatility premium, but certainly the probability of hitting 32 has diminished quite significantly. But my put options, because of that convexity, they really picked up, right? The probability of hitting 27,000 is now, well, it's 100%. So now these things are actually in the money. So the upswing on the put options well and truly offset the cost of the calls. And this is kind of the nature of the beast when it comes to options. My biggest risk is that we went absolutely nowhere and got right to the end, and then I just lost on the time decay. Any kind of volatility from there was going to be a good sign. It didn't really matter which direction it goes, because one of those particular events was going to pay it out. So anyway, let me know in the comments. Let me know if you kind of found that a useful exercise. Again, it's just kind of one of those things to understand how these dynamics work. Certainly, the trade thesis was very simple. Volatility appeared to be mispriced, right? So therefore, bet on volatility. Now, speaking of volatility, here we are looking at the options at the money implied volatility. And if you can recall back to the previous time we talked about this, I tried to highlight that typically volatility, actually maybe just zoom out just a little bit more because it's quite zoomed in. So I've got this on the 1 hour resolution, but you can see here that for the vast majority, and just know that this kind of general trend between about 50 and up to 100 volatility, this kind of range goes back all the way, you can kind of see through all here. It's pretty much all history has been trading around that level. And we've seen that 2023 had been a big decay in that volatility. Well, here we were trading at about 50% of it, right? There's our 50% mark. We were down about 25% in terms of implied volatility. And what that's really saying is that the market was not pricing in a volatile move. And this is the hilarious thing I find about markets. It's so fascinating. For whatever reason, markets price in what they're currently seeing. And in many ways, what else are you going to do? Because if you're not going to price in less volatility, somebody else will, right? So the market goes to sleep, and the market basically positions itself for that to remain the case, even though we all know that volatility is coming. And that is why there is a trade thesis, right? To actually buy those call and put options on the belief that there would be volatility. That is not the way the market was positioned. I really find this such a fascinating concept, where it's this kind of information asymmetry that plays out time and time again, where, I think we could all put up, we were talking about 95% plus odds that volatility was coming. It was probably more than that, because what's the probability that Bitcoin just never moves again? It's close to zero. And yet the market simply didn't price for it. And here we are swinging exactly back into the range. And this was the crux or the thrust of that trade. It was really simple. We're not going to stay down here. We're going to go back up there, even if just for a moment. It's very unlikely we're going to stay down here. So kind of one of these interesting dynamics, but it's kind of good to actually see it play out, to be honest. Now, if we look at the 25 delta skew, now I'm not going to go through and kind of bore you all to death with the technical details. This is basically saying high values means that people are buying put options. The premium on puts, downside protection, is much higher. And you can see we got another massive swing. And this is another one of those things with a market, right? When are people buying put options? When the sell-off is over, right? Here in June, people are buying put options when it's over. They're buying put options when it's over. The premiums on these things just explode at the exact wrong time. I find it such a fascinating dynamic that markets are just like almost always wrong. They're right and they're wrong at the same time. It's this amazing paradox that you find in markets. That not only can they distill the information better than a committee can, and free markets kind of do their job of price signals, but simultaneously they know absolutely nothing and are wrong at all times. And it's this kind of beautiful ebb and flow of investors being on the right and the wrong side of the boat and then reacting accordingly. Now, I'm just going to quickly touch on what happened in the options and futures markets, just to put a bit of color to this. So this is our options open interest. Most of them I'm going to have on like a 1 hour time frame. So really zoomed in, trying to look at the details. Fairly significant waterfall price chart. Not a great deal of decline in terms of options open interest. So, you know, I mean, it declined, but clearly there hasn't been a major flush out of options buyers, right? That's kind of my first takeaway. The options market didn't seem to be like massively levered. Like these, by the way, some of these are going to be expiration dates, right? These big vertical drops. Some of them will be kind of massive closeouts. Here, we just haven't really seen any kind of major liquidation. So to be honest, even though we were just talking about options, that's not where this activity kind of came from. And I think that's part of it being a much more mature market. And it's why I'm a bit more favorable for seeing options coming in as a primary area for speculation, because I believe that it's going to be a more stable, healthy, mature market as that happens. Futures, on the other hand, what is going on here? We are talking about, and this is $13 billion up here, and we are down to, we've wiped out about $1.2 billion in open interest. I mean, as you can see, this is a different scale and magnitude. The futures markets are just full of punters, and they got absolutely wiped out. And by the way, this is only looking at the exchanges that we track at Glasso, right? Binance, Bybit, Deribit. So granted, we've got most of the big ones, but you know, there's going to be more, and there's going to be people who had bets on every single other coin. This is just Bitcoin, right? 1.2 billion flushed out on Bitcoin alone. Man, what a painful event. But you know, this is the nature of the beast. This is what happens. Speaking of liquidations, right? Because remember, not everybody closes out their position. So there was $1.2 billion in open interest that got closed, but not all of those are liquidation. Let me just whack my tooltip on here. We can see what value we're looking at here. So we are seeing 230 million. And this is in an hour, $230 million in an hour liquidated. So of that 1.2 billion, 230. So what is that? About a sixth. A sixth of it got wiped out in liquidations. The rest are kind of forced closed and all sorts of other things. But I mean, just a massive wipeout. Let's zoom back on a 1 year. This looks like, by some magnitude, the largest wipeout we saw. It's on the same order of magnitude as the thing that started this bull market, right? This upswing. So the short squeeze to the upside, it's of the similar magnitude to what we've seen on the long squeeze to the downside. So a little bit of chaos to close out the week. In terms of the funding rate, so now we're gonna use funding rate and then bridge across to the on-chain space, because that's always a useful tool. You can see that we've gone our negative funding rate, right? So everybody, the same way that everyone's buying put options at the lows, we also see a dislocation in futures markets. The futures price, because of all the liquidation of the forced selling, rips down well and truly below the spot index. And that incentivizes this negative interest rate. They typically don't last for very long, but they typically happen around the lows. These lows that get put in, it's essentially an incentive, right? The interest rate to be short goes so high that suddenly market makers go, well, you know what, I'll step in and I'll take that bid, right? I'll take a market neutral position, and actually I will be short Bitcoin and I will go long the perpetual swap, which will allow them to actually capture that interest rate for however long that takes. So that is the purpose of the funding rate, is basically to keep the index and the spot price trading in unison. So anyway, let's just take this away that this is pretty much the largest negative funding rate we've seen. This doesn't mean that the sell-off is over. All it means is that we've got a signal that the market kind of puked and flushed out quite some leverage. Now, moving over to the on-chain space. Couple of takeaways. First one, looking at our URPD chart, macro scale, 10,000 foot view. I mean, I'm not mad at this price distribution, right? We're pretty much smack in the middle of where we kind of expect to be. Really, this is where most of the accumulation has taken place in 2023. We're in short-term holder territory. Now, what that also tells us is that short-term holders are probably going to be more relevant to our analysis moving forward. What we can also see is there's a fairly substantial cluster of investors who are now underwater. So therefore, short-term holders are going to become quite important. We'll be paying a bit of attention to them as we move forward. But at the moment, we're not exactly, just in terms of a core supply zone, right? When we get down to the bottom of this range, then you start saying, not great. In the middle, right? Think about this like a normal distribution, which this kind of is. We're kind of in the middle, right? Again, we're not really here nor there. We haven't really broken out the other side of it, right? It's not really an overly top-heavy market. So does it change my medium-term thesis? No, it actually doesn't, to be perfectly honest. There's a lot of people who are going to get all doomy and stuff, and yeah, sure. I mean, you know, price is down, and it may well precede some kind of further downside. But I'm also not seeing anything too catastrophic just yet, right? I'm thinking about this in the short term. Short term, we could get some volatility and it'll flick around. But if I just think about it in terms of the medium term, that bigger picture view, nothing right now is kind of out of the ordinary or strange per se. Okay, so one thing we have done, now this I think is important, we have lost the short-term holder cost basis. Provided support, and now we are below it. Now, just bear in mind, we have been below this before, and we can recover, right? So a bounce from here would actually be fantastic and ideal. I mean, obviously it would be ideal, but a bounce from here is not something that we haven't seen before. Now, whether I think that's going to happen, I don't know. This one does feel like just the fact that we didn't quite get the momentum on that previous push. I think it probably needs a bit of time to digest. But again, this all comes back to the medium-term thesis of it's going to take a couple of goes to get up above that 30,000 level, right? Chop has always been the default because of just how significant that 30,000 level was. It was the floor of the bear, and we essentially need to work our way through it. So this is part of the bear market hangover, the digestion period. It's going to take some time to get above 30. So a couple of tests here and there, you know, all this really does fit within the kind of macro thesis. MVRV has now dipped down below. Now, again, let me just whack this onto a slightly larger view because the short-term MVRV is a really, really good tool. Let me just wait for it to load. Okay, let's get a bit of a view of 2017 in the mix. So remember that the short-term holder MVRV is basically the ratio, what is the ratio between price and the short-term holder cost basis. In bull markets, these red dips, right? And this is just to try and frame things up. There's a couple of points here. The first one, these dips are very, very normal in an uptrend. So there is every probability that we could actually just bounce from here. Demand comes in. And this is why over coming weeks, I'm going to be spending a lot of time looking at how the response goes. What we've seen, and we talked about this in previous episodes, is you see like the shrimp start buying, the whales start accumulating. Like you start seeing this distribution behavior switch over and people actually start buying the dip. That's what we're going to be looking for. Are people buying this dip? Because that would obviously be quite constructive. That's essentially what we want to see play out. Because if we start to see those kind of mechanics, we still err on the side of this being a bounce higher because this is not unheard of. Now, one thing I will flag that's a bit of a weak point to that thesis, you can see here in 2017 and even here in 2022, we progressively got higher and higher highs, right? Lower highs generally aren't a great sign. Well, we did set a lower high here. Now, what is a lower high when we're talking about MVRVs? Higher price, lower profit. What does that mean? It means coins got transferred from down here to up here. It's a slightly top heavier market. So in many ways, this is kind of an indication that we may well have a little bit more digestion to go. It doesn't have the same kind of full constructive move that we saw here in 2017, nor what we saw here in 2020 after March 2020. It has a little bit more of a 2019 feel to it, right? You can see this downtrend here, downtrend here. It's a little bit more 2019-esque. And given the kind of global macro and all that kind of thing, whether it's going to be a long 1 year type period or something, in fact, I suspect it will be different because recency bias is a real thing. This is telling us more or less the same. This one here I like. Short-term holder SOPR. We saw that funding rates went really negative. We saw a nice flush out of futures markets. We also have a really nice uptick in short-term SOPR. Short-term SOPR ticking higher. This is nice to see. These waterfall maneuvers, you have to go down to go up, right? You also have to go down to go further down, right? This is, again, paradox of markets. But let's just keep in the back of our mind that whilst price is down, there is most certainly a possibility that we get some kind of a bounce from here. It is just something to just be aware of because a lot of people will go, oh, look, it's over, and they just dump everything. But the reality is that this thing could have the momentum to go down, load the slingshot, and then get some upside momentum. Now, we also have to pay attention for some signals that that is not the case. Do we get short-term holder SOPR really spending quite a bit of time down here? Do we actually start seeing it finding resistance on the 1 level? Really, we want to see SOPR get back above 1. We want to see that profit taking start to tick back higher and the market be able to sustain it. So we are now basically on the verge of looking for, do we get demand flow in? Do we get actual supply starting to get sucked out of the market? And do we start seeing investors buying the dip or selling the rip? We really need to look for these two mechanics because that's going to really help us understand the path forward. That's all good from there. Now, this one here is one I'm going to be looking at quite closely. Really, really simple. I've got realized loss, right? Just net US dollars in realized loss. And I've also got the percent of supply in profit, which if you take the inverse of it is obviously percent supply in loss. Now, whilst this is on the hourly chart, and granted, we're only, what is it, about 7 hours since the event actually happened, we haven't really had a major uptick in USD losses. This is the first indicator to me. You're always going to have people who get flushed out. That's the nature of the beast. This is the first indicator to me that we're not exactly seeing a shift in the spot sentiment. And I think this is a constructive sign. If we start getting these kind of upticks in losses, and losses are good to happen, they need to happen to put bottoms in. But if we see basically nothing, spot markets and investors, remember, only the hodlers are left. They're pretty hardcore people. So we're kind of just dealing with macro funds. To me, this actually looks a lot like a derivative flush out. And in many ways, a derivative flush out can often be a hyperextension in the wrong direction. It can get consumed and bought back up. That doesn't mean that's what's going to happen, but all of these things, we just need to be conscious of that this thing could, in fact, if it does recover, I think it's a really constructive sign, and it shows it's a bit more about market structure. It's a bit more about the leverage and that flush out than anything else. Now, the percent supply and profit, this is the one thing that kind of gives me a little bit of pause. A lot of coins, right? We are now below that previous low, even though price is higher. Remember what I said before about MVRV? A lower high on MVRV means coins acquired cheap have been sent to some other guy at a higher price. We are at a higher price right now, and we have more supply in loss. A lower percent supply in profit means a higher percent supply in loss than our previous low. So we do have a slightly top-heavy market right now. Now, just to bring that back to a sense of earth, where we currently are, we're still well and truly in the choppy 2019 period, right? So we whatever this market structure is, this kind of, fledgling uptrend, let's just call it, because we haven't actually set a lower low yet, a fledgling uptrend, we're not really that far from the bottom is I guess what I'm trying to say. We're not that far from the bottom. So let me just, it's gonna be a real pain, but let me go all the way back to, where is it? Here we are. This one here, this is the bottom where the long-term holders were. We're kind of in the middle of that first, oh, maybe Bitcoin isn't dead moment. we're going to chop around in here for a bit. Here's our 30,000 level. This is the bottom of the previous cycle. This is basically green field, right? These people have stuck around and held their coins for the entire bear market. They're not going anywhere, right? They might provide a bit of resistance, but once we get above 30K, in my view, it's kind of off to the races. So in that kind of context, just a bit of chop around here is not a bad thing, kind of the expected result. At some point, we're going to get to that 30K level and we're going to get some momentum to the upside, and it's just going to blow people's socks off. So anyway, look, that's kind of my big picture view. A lot of this looks like a leverage flush out. It looks like a lot of people bet that there'd be no volatility, which is hilarious because, of course, it's going to get volatile. So far, there's nothing that's kind of like going, yeah, it's over. It's probably going to take a bit of time. I mean, the chart looks pretty ugly. It'll take a bit of time to digest it and kind of recover from it. But the fundamental, I mean, at the end of the day, what are the fundamentals of Bitcoin? How much do Bitcoiners believe in this thing? And that just doesn't appear. And again, we're only a couple of hours past the event. We will see how the dust settles. But I haven't yet seen the crushing blow. And to be honest, I think the crushing blow is going to be kind of hard for the market to deliver. So what really matters now is how does the market deal with this probably over the course of the next week? If we get back into the 28,000s, that to me is the first sign that we're probably starting to consume and get back above these levels. Then you start saying, okay, and we will get a bounce at some point. Do investors sell the rip or do they sell the dip? And SOPR variance is going to be really powerful here. We want to make sure that we don't get realized losses start to tick higher because realized losses are going to come from these guys. We want to make sure that our realized losses don't pick up, that our realized profits also ideally actually stay pretty flat. And we want to see those entities, right? Those balance changes really start to pick up and we start seeing people actually buying the dip. This is what we're going to be tracking over the next couple of days to really assess how is the market dealing with this. But so far, I mean, we're literally, in terms of a bell curve, we are smack in the middle. So we're kind of at the expected result given the chop, and 30K remains above us. And really, we don't want to be getting down below 25. I think that would be a net negative. So anyway, hopefully that's useful. This is all part of the slow hangover grind as we try to get our head back above water following what was a pretty nasty 2022. None of this is overly surprising. And isn't it funny that volatility, the market just doesn't price for it and then bang, slaps you in the face. So here we are. Anyway, hopefully that was useful and I'll catch you in the next one. Cheers.